Hey, good morning, guys. I haven't done a YouTube stream for a while, right? TradingView obviously stopped their streaming. I'm a bit more active, obviously there before stopping. In the grand scheme of things, there hasn't really been that much to update, on. I've spent a bit more time, I guess, putting kind of members' videos and some of the educational stuff together more than, looking at these charts. But what I want to do is just go back, I guess, to where we are now and what we kind of see next, why next. And I think, for me, bigger picture, the reason that I've said for the last 18 months is nothing's changed, no changes, that in the price action, right, we've only done, one of the three options, right? And the three options that I put out were, again, kind of if we do this, then that. If we do this, then it's the other. If we do the third, then, oh shit. And I think in the grand scheme of things, bigger picture, the factors really haven't changed, right? Now, if obviously, you're a massive believer, you're only looking at up and up only calls, you're kind of following and chasing videos that scream, 100K, 250K, then good luck to you. But what we've wanted to do, and the reason that we talk the way we talk is we're long-term traders, right? Our trading doesn't come from YouTube revenue. Again, part of the reason we don't do these streams daily, 4 streams a day, is we're not looking for the attention, right? We chase the money, right? And the money is obviously the value. Now, look, in the grand scheme of things, the bigger picture, again, just hasn't changed, right? Or not for me. If you're looking for something to support, a call to 100K, I'm sorry, I can't give you that yet, right? There's no rationale, there's no logic. COT data is still pointing down. We've got to pause, right? I'll come into the smaller time frame, but I just want to go back and kind of emphasize, part of the logic behind the bigger move, right? Because if you know where you are, bigger scale, it's so much easier to work out where we go next and kind of why, right? So when I look back at these time frames, now, some of the calls that I had obviously back early on, kind of rode this up, kind of come back down to, talked about that reaccumulation. They blew up the rocket, why the rocket was only down to 28, why we could see a truncation here, why this was actually the kind of redistribution down to. Now, at this particular point, right, what I really wanted here was a large scale accumulation. Right now, for me, this is kind of where it gets a little bit more. People don't seem to understand this. Right, this is the only way I can kind of put this is people don't grasp this. Right, if you look at the time factor from inception through to say the high, right, this point here, the time factor is colossal. Right? Let's just assume that that is some kind of giant one. Right? You don't get a two in 6 months, right? It just doesn't happen. Right? Now, again, if we look at the kind of factors from an Elliott wave perspective, let's assume that this is, the one. Right? Now, a lot of people say, oh, A, B, C, we're done. We're off to the moon. The reality is we have 3 scenarios, right? And this is where the 3 scenarios come in, right? Now, first things first, a lot of people have seen the chart around the Wall Street cheat sheet, right? This chart here. Now, again, this is something that has been shared a million times over, right, on your Twitters and so on. You've got to look at where we are, right? If we were at this euphoria stage up here, right, we then come down, we get to this point here, the anxiety, right? We get to the denial, the panic, right? The kind of the sell-off. We get into the anger phase, right? Now, obviously, a lot of people assume that this leg will give us a next major rally, right? However, the problem that you have with even this as a cycle kind of over and over again is this is fractal and fits inside the much larger move, right? So you're going to get this as a 0 to 1. You're also going to get this as a 2 to 3. You're also going to get this as a 4 to 5. But you're also going to get this from an A to a B, right? So the same concepts play themselves out over and over again, right? The reason that I wanted this move here right, is that if we come back down and we kind of play, we fill up the tank to really let rip, right? We didn't. We had the fake BlackRock news initially. BlackRock ETF being approved, and we had this kind of rally from here to here, right? Basically creating a massive gap. Okay, so for me, this is still, unfilled, unfulfilled, and ultimately is still a giant magnet to price, right? So if we look at this being, let's just assume a one, right? I'm going to keep this as a one regardless. What we then had, right, is back at the lows. I talked about this, right? The Wall Street cheat sheet in action. The anger, the depression, right? Now come back to the chart. Look at where I put these together, right? The anger, the depression, right? And then ultimately you're expecting the rally. So at this particular point, the rally was due. The question isn't, are we up? The question is, how far up, right? Now, at this particular point, the benefit of option one, right? Let me just hide this one again. The benefit of option one is that option one would have given us additional fuel to really let rip. Right? The second option is actually the option B. And then you have, and this is again part of the reason I don't like trading corrective moves, is that a corrective move compared to an impulsive move has literally three golden rules, right? And it's kind of the whole rationale behind the philosophy behind Elliott Wave and how this actually works is that when you're trying to assess, human nature, human sentiment, ultimately you you're breaking this down to three golden rules. The three golden rules, right, are as simple as number one cannot go below zero, right? So if we start with a zero, come at one, right? We can't literally come below this level, right? If we go there, 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 and there, right? We invalidate, draw a quick line on this trend line, right? We invalidate from there to there, we invalidate the move, right? The move can come back down 99.9%, still be valid. The second golden rule is 2 to 3 cannot be the shortest when comparing to 0 to 1, 4 to 5, or 2 to 3, right? So you could have, for example, quite a giant 1, right? You could come back for a large 3, as long as then the next one, I'll tell you the next rule in a second, right? You could have a baby 5, right? Now the logic behind this is that ultimately, if number 1 is quite extensive, number 2 is quite extensive, right? Number 4 to 5 is a bit babyish, right? Now this baby move here means that number 3 is not the shortest, right? Now it could be the inverse. You could have a very small 1, 2, right? You could have this kind of hyper 3. We come back down for a little 4, right? And then we have again kind of a giant 5. Now even if the 5 was hyper extended, right? And this becomes the longest, basically is still correct because number 1 is actually the shortest, right? So the rules are pretty straightforward, right? The first rule obviously is you can't go below 0. The second rule is number 3 can't be the shortest, right? It doesn't have to be the longest, but it just can't be the shortest. And then the last rule is basically 3 to 4 cannot dip inside. Right, let me just move this there. Cannot dip inside the territory of the 0 to 1 move, right? So it can't become low, right? Now, again, the logic and the rationale behind that is pretty simple. If the price dips below this level, composite man, the bigger operators, they lose their technical control on the market, right? So sentiment will kind of want to drive this forward, right? Now, if I was to draw a pretty, textbook type Elliott wave move, right? You're going to look at something probably a little bit more like this, right? And the reason that you have something similar to this, right, is when the price is accumulated down low, right, you want a kind of a spiky type one, right? Not always, right? Now, the reason that you want a spiky type one is that it's composite man and the bigger operators kind of testing the water, right? Now, kind of almost getting an acceptance of price. When people start to see prices rallying, prices rallying, prices rallying. Now I'm talking about this being, could be a monthly time frame, could be a weekly time frame. A lot of retail traders are trading on a 15-minute chart, right? So this is going to look massively impulsive from a retail perspective, right? Then what you have is a very aggressive move back down, 9 times out of 10, right? This isn't me saying this. This is what tends to happen. Now, the logic behind this move is that Composite Man knows he wants to drive the price up. But he also knows by driving the price up directly, there's not enough liquidity that he's been able to get his hands on to drive the price up and through. Right? Then what you have, inside these moves, you're going to have fractal moves that do a pretty similar thing. And I'll change the color of this in a second just to make it easier to see. Right? You basically have these fractal moves, right? This is what you call nested. Now, inside the nested move, right, you're going to get a couple of areas where they overlap, right? You're going to come back down into, an area of liquidity, which is basically a rise and a retest before accelerating through, right? So you can see how these things kind of fit together, right? Now, what you'd expect as you break through the previous one level here, you're going to expect breakout traders, short stop losses from this position. You're going to expect, new entries that have been entered maybe up here. So you expect an acceleration in price through that previous high, right? Which is why 2 to 3 is often the longest, often the most impulsive of the moves, right? By the time we get up to 3 to 4 and we break this level here, the move is already tired. Composite Man has kind of less interest. He's already thinking of exiting the position and entering a new short position, kind of up higher, right? So it changes the characteristics of the movement. Now, back to the point of me explaining all of this is when you put all this together, right, the move from one up, right, if we've taken, from 2009 through to now, or through to 2021-ish, right, in terms of completing the one, we're not going to see, a 5 or a 1 down to an ABC, completion of a 2 within, 6, 9, 12 months, right, overall. You just got to think practically of the time factors, right? So let's assume now that we look at this move from a corrective perspective, right? The reason that I don't like corrective and the reason that corrective is harder, the reason that you don't really need to get a kind of grasp on the corrective moves is you've got 3 or 4 different types. You've got zigzags and flats, right? You've got obviously wedges and so on, or triangles, whatever you want to call, the kind of corrective move. A lot of people use different terminologies for these. Then you have what they call a double 3 combo and a triple 3 combo, right? Now, the challenge for me with, like I said, with these is it just becomes more complex, right? Because you don't really have just 3 or 4 likely scenarios. You have scenarios that happen within the wave, right? So you could have a zigzag, and a flat. You could have a flat, a zigzag, a flat. You could have flat, 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 right? The issue being when it comes to all of these things is every single one also has a different variation on an extension. Some only go to the 618, some go to the 100%, some go to the 123%, some go obviously to the 1.618%, right? Some can actually hyperextend even further than that, right, and still be valid. So when you put all this together, right, you have a couple of options, right? You've got to look, first of all, from this move to this move, right? And then you can measure this out, right? So if we were to measure this here to here, right? That's the wrong one. If we were to use this fib retracement, right? First move, right? You've got practically a golden pocket, right? This is what we got in green, right? This is the kind of area that you'd expect kind of maybe the most common type of pullback to occur, right? So again, kind of in an ideal world, if we didn't get the accumulation, right, you would have wanted the price to come back down, right, and test the underside of that, again, giving you kind of fuel to accelerate up, right? We didn't really get that test, right? So as you then have, what you're seeing right now is the hyperextension of a B move. Now, when you look at the hyperextension of a B, you come in then to what they call a running flat, right? Now, a running flat is basically up to, usually, and again, it can be a little bit more, it can be a little bit less, right? but it's up to 123% of the A. So I'm going to measure from the bottom to the top, back down to the bottom, right? That's measuring the A leg. The 123%, look, right, is here, right? So we can still be pretty valid. Now, realistically, all we've done is we've come to a triple top type of move. First top, second top, third top, right? Which is one of the scenarios, obviously, I talked about 18 months ago. Right? The concern for me there is that's 100% of A, and that doesn't seem too impulsive, bigger picture, right? So let me just clean this up a little bit more a second. The logic and the rationale behind this move, right, is if we were to go and become impulsive, as I mentioned earlier with textbook type move, right? The reason that we accelerate when we break a high, the reason that we accelerate when we break a high is simply because we've got breakout traders, short stop losses, new positions being added up higher, right? All of the above. We get to the top and we kind of run out of steam. You'd expect this to accelerate, not decelerate. You'd expect this to, fire through 100K at this particular point. And yet we've kind of struggled, right? So for me, again, the reason that nothing's changed is that we've got, this option B, right? Now, again, a lot of people, especially if you're into Elliott Wave, a lot of people will say, oh, well, that would mean we got to come all the way back down. You don't need to see 12K. You don't see 9K. You don't need to see zero, right? The reality is you just need a breather. And that breather isn't going to happen fast, right? A lot of people are going to say things like, oh, the ETFs, oh, the halving, oh, the price multiplier. So we've got a price multiplier. We've got 12 approved ETFs, and we've had the halving. Where is the rationale as to why we haven't hit 100K yet, 250K yet? What are we waiting for? Right? That's the big question. So for me, again, nothing's really changed, in this big picture. Right? Now, what I'm going to do, I'm going to come into the shorter time frame view. Right? This is obviously where, a lot of people are looking for. And the reason that I've left this more towards the end of the video is that, the people who are going to go, oh, well, I want this and I want that and I want to know up or down, they've already left. Right? This is a long time, kind of coming. And this is part of the point, right? This for me is just kind of, it weeds out the shit, right? When I look at obviously back to this particular level, right? Regardless of what we do up is what you expect, right? The type of up is what you then need to understand as to what we're getting, why are we getting what we're getting, right? Back last week, I talked about this, well, actually, this is a couple of days back, the first bit here. I talked about a couple of key levels, right? And I put these kind of in orange. I talked about this within the members area and why we were expecting the price to, travel up to, where it was going. Why these areas are kind of key, why they're useful, right? I'm going to come down to a 1 hour time frame. I'll just kind of zoom this out, right? And I'm going to change from my current alerts into the orange squiggles, right? The logic and the rationale behind this, going back, obviously, let me get rid of this one as well. Right, going back to, last week, first of all, this was me only posting on the 5th of the 6th, but this was a couple of days before. This was back, I don't know when exactly this was. But look, ultimately, right, these orange squiggles, I've broken it down as to, why, where, what, right? All we've done is exactly the same thing as we've expected, right? We're kind of breaking down these moves, we're breaking down these kind of patterns, right? We're talking about, these kind of key levels and what happens kind of at the key levels, right? This obviously was, we moved up, we come to the orange squiggle, we ultimately come back down. You can see the level of respect, right? This is the master pattern box kind of sitting in there. See the level of respect that we gain in, right? And we actually, I haven't even measured that. Let's see if I measure this roughly from the top to the bottom, right? So we've got, a potential kind of downside target sitting, practically there, right? We've also got a key level, right? And I've explained this key level for the members. We got another one lower, right? The major issue is as this moves up, right? We've got this massive gap down, right? Which means also a massive gap in volume, right? So unless this support holds, we have the next key area being around the, what's this? This is the 59.3 level, 59,300 type level, right? So there's a massive gap there. We got to see if this obviously holds in terms of support. And as soon as we either fall through it, we're going to know, kind of where next, because we'll expect that to be pretty rapid after the breakthrough. Now, look, this all comes back to the COT position, right? I'm going to see if I can find COT really quick. The crypto COT, right? The leverage funds are kind of lacking the interest. I probably won't load this at the moment. This was from last month. Where's the new one? This is from the 3rd of May. This might just load. I think the bot, after a couple of days, is waiting for the next, obviously, input. So, long story short, yeah, it's not loading. Long story short is ultimately leverage funds are still net short, right? So it kind of validates the move B that I've just spoken about, right? It validates the kind of the breakdown. As I've talked about, again, I know a lot of people take things out of context and don't really kind of grasp it because they look in too small of a time frame. We've actually got, pretty much a downtrend happening, right? We've got kind of lower lows and lower highs kind of forming on an hour time frame. If you zoom out, it's obviously just easier to see, right? The issue then for me, right, is when I look back at the sentiment, right, I've talked about all these levels, right, then you get things like this, right? This is where the retail mentality is just absolutely screwed, right? This guy's posting $130 billion asset manager has bought 68 million, right, through 6 ETFs. And this is posted as if it's a good thing, right? So you're looking for a bullish narrative. Now let's just assume that you've got $130 billion under asset. 13 billion would be an allocation of 10% of your assets under management. 1.3 billion would be 1%. 130 million, 0.1%. So what is 68 million, right? Do you see this as a positive? Do you see this as we're all in? And I made the example, right, just to kind of highlight the point. If you're worth $20 million and you go out and buy a set of golf clubs for 10 grand, right, $10,000, that's the equivalent of the same ratio as an asset manager with 130 billion under management spending 68 million, right? It's a set of golf clubs, right? When you're managing that type of money, right? Now the issue is for me, if you put that into, Bitcoin, let's just say you've got a 10 million, you know, I can't even comprehend how people can see this as, it's bullish. If your net worth is 10 million, you said to your friends, just invested 5K into Bitcoin, there's the same kind of ratio that we're talking about in terms of asset allocation, right? So just be careful in terms of what you read, in the news, right? So back to this shorter time frame. Right now, there's no reason for 100K, no reason for 250K. We've had the halving, we've had 12 ETFs approved, we've got a price multiplier, and yet we're struggling above that 69K, right? We went up to 69K, triple top, right? We had 2 or 3K as in hype, right? This ultimately brings us to potentially not the end of the trend, because that's unfair, but I think it brings us to a kind of a local top for the time being, right? We've got to find some new narratives in terms of why, what, where these kind of new money kind of inputs come from, okay? So in terms of where we are right now, shorter time frame, we break this particular level here, which is the 61.8-ish. I think we got a good chance of dropping down pretty quick through the gap, right? Through the gap, it probably brings us to 60k down to 59.2, right, roughly. Um, then obviously we've got a couple of key areas. If I turn these off and put the alerts on, we got a couple of key areas that I expect kind of on the way down right now. I'm not expecting this to break down all the way. I'm not seeing this as, a drop to 30k or whatever right now. There's two things that I think short the time frame that could happen. First thing is ultimately we drop down and through, back up to the underside, and then ultimately down again, right? At that point, then we can reevaluate and look at, kind of what's next, right? So I think for me, bigger picture, nothing's changed. And sorry to use the same term, but nothing's changed. I think in terms of the bigger B move, it's probably healthy for Bitcoin in the long run. Third option obviously is impulsive, and if it's impulsive, then we are screwed, because this is actually then having to drop and accumulate on a monthly type time frame, which means we go back to what we were seeing from kind of 2021 through to 2024, which means we're unlikely to see 100k for another 2 to 3 years if this was an impulsive move, right? So the issue then being is I strongly believe this is more act as a B, right? And that's just my, honest opinion with 25 years worth of experience doing this kind of thing. All right. Anyway, I hope you enjoyed this one. Sorry it was a bit longer. It was just obviously haven't done one for a while. So hope this kind of catches you all up, and I'll see you on the next stream. Thanks for watching, guys.